In this video, I'm going to talk about the strategy that got me from an unprofitable trader into getting payouts on a weekly basis like this and this. And the truth is, the reason why a lot of traders fail is because they try to overcomplicate their strategy. So in this one, we're going to focus on one core foundation. Each time frame has their place so that you don't have to be confused. You know exactly where you're going to look for what I'm going to tell you, and you know exactly where you're going to execute. With that being said, let's get right into it. The most important thing for you to master first is trading's most foundational concept. You see, every single time that you enter in a position, you are betting that the market is more likely to go in one direction than it is in the other. That is what a trade is. You are longing if you believe that the market is more likely to go to the upside than it is to the downside. That gives you your entry, your stop loss, and your take profit. So it's always a bet on direction. And that is the most foundational concept of trading. Direction is extremely crucial because if you understand where the market is more likely to go, you also have just cut your workload in half. And I think this is important because by focusing on direction, when the market is moving to the upside, you will never be looking for shorts. And when the market is moving down, you will never be looking for longs. And the reason why this is important is because so many traders, they get into trading and every single day, they look for reasons as to why the market should go up and they look for reasons as to why the market should go down. But by focusing on direction, you understand there's one direction that the market is more likely to go, and I'm only trading in line with it. And that puts all of your focus on the most foundational concept of trading, and then execution becomes much easier. We're only going to be looking at 5 different time frames, and each one of them has their place. The daily and the 4-hour, these are to find the direction of the market. The 1-hour and the 15-minute chart are going to be to find the key levels on the chart. And last but not least, the 5-minute is going to be purely for executing. Now, to understand how we have to execute, you have to understand what key levels we're looking at and what direction we're looking at. So we're going to run through this right now so that after this video, you can go ahead and apply this in the live market yourself. I've also created a full direction course. It is called Master Trading Direction. So you master the most foundational concept in trading. These are 5 different episodes and interactive exercises, and I launched it today. As you're watching this, you can go to mastertradingdirection.com for free or click the first link in the description to watch a full free direction course. Now, let's talk about it. Direction will be seen on the daily chart and on the 4-hour chart, because what happens is that a lot of traders, they get caught at all-time highs on NASDAQ thinking there is no way it moves higher. There is no way. It simply can't. The market can't always continue to move to the upside, and that's not true. The market usually tends to continue the current trend that it's on, especially if we're talking about NASDAQ. And so you will notice that the market is always respecting bullish key levels. And that's really the question that you need to ask yourself every single day. What is the market choosing to respect? Because notice how the market moves down, so you would be bearish, but as soon as we engulf, this now becomes the easy longs. And now this is where the 4-hour comes in. If you quickly check, you would have been able to be bearish as we have the market structure shifts to the downside, and then as soon as we sweep the low and we reverse, you would now be able to be bullish. This is why I was shorting on the way down and I was longing on the way up. Here's a screenshot of me profiting on the 19th of May, and here's a screenshot of me profiting on the 20th of May, and one of them shorting and the other one longing. Just so you know that I'm not only doing this through hindsight, but I was actually executing on all of this. And yes, this is the strategy that I use every single day to apply on prop firms such as FundedNext, that with code Kimmel you can always get the best discount code. They have CFDs and they have futures. Whatever plan you want, consistency rule, no consistency rule, or cheap, they have something for you. So go to FundedNext and use code Kimmel for the best discount code always. In Eastern time, this is what our days are going to look like. At 9 9 a.m., we are going to find the direction on the daily chart and on the 4-hour chart. And we ask ourselves, what is the market choosing to respect? And therefore, we understand where the market is more likely to go. At 9:15 a.m., we're going to find the key levels on the 1-hour chart and on the 15-minute chart. And at 9:30 a.m., this is how we look for the executions. So let's go back to understand key levels, and then I'll show you how to execute on it for a whole week. So this is the first 8 a.m. candle. And what we can see on the 1-hour chart is that we created this new order block that we're still inside of. Now we can also mark out this extreme because from here, we want the market to move higher. Keep in mind, we've noticed that the 4-hour is bullish and that the daily is bullish. So therefore, we're only looking for bullish key levels. Why? Because the direction of the market is bullish. So therefore, we are more likely to move up. We do not care about bearish key levels. And then from this key level, we started moving to the upside for the rest of the day. Let's go on to the next one where we have our beautiful 8 a.m. candle. So now it's time to identify the direction and the key levels. We've already seen that the direction is bullish. So now we're looking for bullish key levels. And we can see our bullish order block right here. And then the market at 8 a.m. closes above this move to the downside, creating a new order block. And so from here, this is where we would want them to see the market reacting from. We go back to it and then eventually move to the upside. Going on to the next one. Now, these are the type of days that I don't really like because there's not a lot of key levels to go off of, right? The market had a very strong range, so therefore there's nothing that interests me. Notice how all of the key levels that we've marked out have been incredibly clean. And also that is why we had easy trading there. So every single time that you're like, I don't know where the market is heading, or I don't know what the key level is, you simply do not trade. And so we move on to the next day where we have very nice. The market pulls all the way back, sweeps the low, forms the market structure shift, already pulls back to the order block and to the fair value gap. And from here, we start moving to the upside. If we go onto the 15-minute chart, you can also see that we have a very nice 15-minute order block. So from here, we would expect the market to come back to it and then move to the upside, which we did. So now that you understand key levels and now that you understand direction, which if you want more help with it, you can check out mastertradingdirection.com. It's a whole free course for you to check out direction. So now we have 9 a.m. We look for direction. 9:15 a.m. We look for the key levels. So let's talk about what we do at 9:30 a.m. First, we wait for a manipulation to the key level that we identified at 9:15 a.m. Eastern Time. Again, this is why this whole video is important. You need to understand the direction and the key levels. Then, we're going to wait for a 5-minute engulfing candle at the key level. Then we're going to market order. We're going to put the stops below the engulfing body. And last but not least, we're going to target a 1 to 2 risk to reward. But let me show you exactly how to execute on this on a daily basis. We start off on the daily chart to identify the direction of the market. And the first thing that you see is that we failed to create a higher high multiple times. You can see this also on the 4-hour chart where we have the all-time high, but then we failed to create a higher high, failed to create another higher high, and now we're close to the market opening and we're continuously moving down. So therefore we would be bearish. Now we go into the 1-hour chart and we identify the key levels that we have. So we have this order block, and let's go to the 15-minute chart, and we have this whole order block. So what we want to see now is the 9:30 a.m. candle. We want the market to move higher, engulf, and then we want to short. So let's go to the 5-minute candle. So now we're on the 5-minute time frame. I want to see 9:30 a.m. open. So the market is opening now. We have the move higher. We move towards the key level. We engulf the bullish move. So therefore, we execute on the shorts with a stop loss above the high, and we target a 1 to 2 risk to reward. So we sell, stop loss goes above the high, and we target a 1 to 2 risk to reward. And just a little bit after, we have our 1 to 2 risk to reward hit. Now notice how I mentioned that you can have your stop loss above the engulfing high, but when the market is this aggressive and we have a strong wick, I put it above the high. But notice how these trades very rarely have strong drawdown because you're waiting for that manipulation. You're waiting for that engulfing. So the market is already in your favor once you're executing. But let's continue on to the next day. On the next day, we have a massive move to the downside, right? This was from yesterday on the trade that we got a 1 to 2 risk to reward. And now we are reversing. So when we go onto the 4-hour chart, you can see that internal structure is bullish, yet the daily is bearish and the external structure is bearish also on the 4-hour. So this creates conflicting beliefs between the daily and the 4-hour in terms of direction, creating low probability conditions. But either way, let's identify the key levels. We have the market tapping a 1-hour fair value gap. We go to the 15-minute and we don't have any recent key levels. So now what we would wait for is the market moving higher at 9:30 a.m. Eastern time. Let's go to 9:30 a.m. Eastern time. Okay, this is going to be 9:30 a.m. The market moves to the downside, creating no manipulation, and then eventually it just ranges around. So therefore, because we had no strong manipulation at the market open and we had no strong key levels, just like we had before, where we had 15-minute order block, bearish order block, we had a 1-hour order block, all of these very strong key levels, and here we had nothing. So now let's move on to the next day. We go onto the daily chart and we go onto the 4-hour chart. At this point, once again, we can see external structure is still bearish, internal structure is still bullish. So what we would want to see, very strong key level being tapped and then moving to the downside after the market open. So we can see an order block right here. We can see yesterday's high, and on the 15-minute also nothing besides the order block that I've already marked out on the 1-hour chart. So what we would want to see at 9:30 a.m. Eastern time would be the market coming up to it, moving down, and then giving us the engulfing. So let's go to 9:30 a.m. Notice how we already swept the high, but again, I want this to happen after 9:30 a.m. Eastern time. Why is that? Because then traders are longing, thinking that the market is going to move higher, and once it goes down, all of the bullish traders have already positioned themselves and our shorts are way more likely to hit. So that's why I always want to see manipulation. So now we're going to have 9:30 a.m. Eastern time. We have sweep of the high, moves lower, and now we manipulate to the key level. This is why key levels are important, because else you would have been caught in these shorts. Key levels are incredibly important. And then we have a strong engulfing. If you wanted to wait for more confirmation, you could wait for more confirmation. Now we enter here, stop loss goes above the engulfing. In this case, this is a massive stop loss because the market is very, very volatile, and we target a 1 to 2 risk to reward. We enter in the sells, stops go above the high, target goes to a 1 to 2 risk to reward, and a little bit after, our targets get hit. Now let's try one more time. The direction is bearish. I believe we can all agree on that. On the 4-hour, we are still bearish. We have a nice 4-hour order block right there, but we will be able to see it on the 1-hour too. We have our order block right here. We want to see the market moving higher and then moving lower. Now, if we go into the 15-minute chart, we can see that there's an order block right here too, and this order block that was created. Now we wait for 9:30 a.m. Eastern time. Just reduce this so we can see the two different order blocks. Now we wait for 9:30 a.m. Eastern time. So now we have market open. The market moves higher and engulfs, but it didn't have strong manipulation. We have that move higher, strong move higher. Now we're waiting for the 5-minute engulfing. We have the strong engulfing, but notice how we are very bullish coming into it. So I want to wait for a little bit more confirmation. I could enter right now. The checklist is right there. So now we come into the higher time frame key level. We're waiting for that 5-minute engulfing. This is your 5-minute engulfing, but I want to wait for a little bit more because the market is this bullish. We have a very nice and beautiful engulfing right there. So we enter in the shorts with a stop loss above the high, and we target a 1 to 2 risk to reward as always. Enter in the sell, stop loss goes above the high, target is a 1 to 2 risk to reward, and a little bit after we have our take profit hit. Now the beauty of this strategy is that you're going to have a higher strike rate because you're waiting for so many things to align with you. It's not the type of strategy that every single day is going to give you the perfect entry. And let's even imagine that we would have entered in a couple of losses this week. For example, let's say we would have entered in this engulfing instead of waiting for a little bit more. Let's say that that would have been a loss, right? We would have targeted a 1 to 2 risk to reward. And on the day where we shouldn't have traded, we would have taken this trade right here, and that would have resulted in a loss, right? You would now have more trades and you would have an extra 2 losses. But the truth is, if you really think about it, 2R, 2R, 2R. That is a total of 6R made in 3 trades. If you would have added 2 losing trades, you would have still profited 4R. And the reason why is because you understand the direction where the market is going, where the market has to react from, and you're waiting for a strong engulfing for you to finally enter. This is the type of trades that we enter inside of Funded Trading Blueprint. Every single day, I send my analysis. Every single day, I send my trades, and I do live trading sessions too. This is not a signal group. If you come for signals, you will not be accepted. So therefore, if you want to learn one-on-one with myself, then check out the link in the description to get funded in just 90 days. But if that is not what you're looking for right now, we also have Master Trading Direction, because direction is the most important thing in your trading. And for that, you can check mastertradingdirection.com or the first link in the description to watch a whole free course on direction. With that being said, hope you all enjoyed. Hope you were able to understand exactly how I execute. And with that being said, I'll see you in the next one. Peace.